This is Carrie Johnson with the Iowa Department of Management. This webinar is going to be a brief overview to assist city and county assessors as they complete their fiscal year 23 budget for Department of Management and for their county auditors in order to levy property tax. So we'll start out with some general budget information. If you're familiar with the budget process for county auditors, there's not a lot, or excuse me, for assessors, there's not a lot of new information available here, but you'll see just kind of some reminders of the property tax levies and at least one change that did occur legislatively. So the Department of Management's role in the process is to provide the forms, including the web-based forms. We provide the instructions, we provide any needed technical assistance, assistance with any questions that you have during the budget process, and we do that for all the local government budgets. For assessors, we suggest you go to the Department of Management's what we call sort of the assessor resource page. And you'll find that at dom.iowa.gov/assessors. So the information that you need from the Department of Management is primarily located in this spot. One of the things you'll see there is a listing of tax rate documents. So for several of the past years, you'll find for each year a listing of each county and city assessor and their tax rates that were levied in that year. So we'll see just kind of an example of what that page looks like. It would have the different assessors, assessing jurisdictions, the tax rate for each of those, and the total tax rate as well as the total tax asking. So we'll take a few moments then to go over the different tax rates that are available to assessors. The primary one being the Assessment Expense Fund, and that is a rate limit of 67.5 cents. And it is to finance the basic maintenance and operations of the assessor. So in a lot of ways, it's sort of your general fund that you use to maintain your office. You do have available to you FICA and IPERS funds. Those are not rate limited. You levy the amount necessary, but your assessment expense fund must be at its maximum. So you would levy FICA and IPERS within that 67.5 cents until you're not able to. And at that point, you can levy in FICA and IPERS specifically to support your employer contribution to FICA and IPERS for the employees of the office. No expenditures are shown in the FICA and IPERS funds. You would pull in the revenue, pull in that tax revenue, and then you would transfer it to the fund with a salary expenditure. So you transfer it to the assessment expense fund, and we'll walk through an example of what that looks like in your budget forms. Emergency levy, this is for an emergency that cannot be financed through the assessment expense fund. It is covered under Code of Iowa 24.6. There's a levy limit of 27 cents per thousand, and it requires approval of the State Appeal Board. There's a special form, Form 699, that needs to be completed. So when we talk about this as an emergency, we're saying a situation that is a fiscal emergency, meaning the assessor needs to complete something that they're not able to within the current resources of the assessment expense fund and the levy limitations. So they would adopt their budget, including this 27 cents. They would go through the budget process, including that requested amount, requested emergency fund. Pass their budget in that manner, submit it to the county auditor, and then it would go to the State Appeal Board. And they would hear testimony from the assessor to see the reasons for the need for the emergency levy, and they would then render a decision on whether that emergency levy could indeed be included in the final budget. And when those those are allowed, funds must be transferred from that emergency fund to be spent. So you'd levy it within the emergency fund and then transfer it to assessment expense to actually be spent on the required thing that you're doing. Unemployment levy is available as well. There's no rate limit. It again is the amount necessary, and it's to pay for the cost of unemployment coverage, either the premiums to be part of the state plan or on the other side of it, actual claims that are submitted to Iowa Workforce Development. Tort liability, there is no rate limit for tort liability. It is the amount necessary, and it's to pay for the cost of liability insurance. So this would be, your general liability, auto liability, professional liability, any bonds that are required to be made. And it also can be used for the payment of a judgment or settlement within the scope of Chapter 670. So if you have any questions regarding that, and the usage of that fund, I would suggest the review of Chapter 670 in statute. The one new item that I wanted to share with you is an update regarding the commercial and industrial replacement for fiscal year 23. So, if you were around, you may recall that in the 2013 legislative session, they passed Senate File 295, and this created a commercial and industrial replacement process. So essentially what occurred is for commercial, industrial, and railroad property, what the law provided is that for those types of property, instead of being taxed on 100% of their value, they were actually rolled back and taxed on 90% of their value. As part of the legislation, then, the state would make replacement claim payments to the county treasurer, which then would be distributed to each levy authority in September and March. So the state lowered the amount of their value that was taxable, and then would make a replacement payment essentially to the county treasurer that was then distributed to all those taxing bodies, essentially for their loss in potential revenue because of that reduction in taxable value. So then in the 2021 legislative session, they passed Senate File 619 and essentially phased out the state's replacement payments through fiscal 29. So essentially what the assessor received in fiscal 22 is then going to be phased out beginning in fiscal 23 by 1/8 until you'd receive zero in fiscal 30. So to see an estimation of the revenue to be received in the current year and the revenue to be received during the phase out, you can go to the commercial and industrial replacement location on the DOM website. I list the website here, but it's also in your instruction document. And you can select assessor, your appropriate county, and again, you can review the estimated revenue to be received during the phase out. When you report estimated revenue in your budget itself, you'd use the line item commercial and industrial replacement. The budget deadline is unchanged. It is March 15th for the fiscal 23 budget, so March 15th of 2022. And it is important to keep in mind that your budget can be protested. Protesting a local government budget is covered under Code of Iowa 2427. So anyone that's affected by your budget, its expenditures or tax levy, can appeal that budget by filing a petition. So they would have to gather signatures from within your county, or if you're a city assessor, within your assessing jurisdiction of the city. So they would need to gather signatures, and the number of signatures required is based on a percentage of the folks that voted on the last governor's election. So you'd need to check with your county auditor on the actual number that's required, but they could gather signatures, file that petition with the county auditor, and if they do so by March 25th, then that budget could be petitioned. So essentially, their deadline is March 25th, 10 days after your budget is required to be certified. So assuming it's an adequate number of signatures, the county auditor would then forward the protest document and petition to the State Appeal Board. The State Appeal Board is a 3-member body of the Director of Department of Management, the Auditor of State, and the Treasurer of State. And so upon receipt of a petition, they would schedule a local hearing in your assessing jurisdiction, and both the petitioners and the assessor's office would have an opportunity to speak to the issues raised in the protest. There'd be an opportunity for public comment and that sort of thing. And then all that information would be taken back to the State Appeal Board for their discussion and review. And then they would render a decision on the protest. They can lower your tax asking and your expenditures. A budget amendment is the next thing to review, and keep in mind that it is required for any increase in the totals for funds. For assessors, you guys are also a little different because you are required by statute to itemize out the salary line items within your budget. So just kind of keep that in mind too, that that's going to trigger an amendment process for you as well. But for the most part, for your other expenditures, it is the total of the budget that you're looking at, the total of your assessment expense fund, essentially. So a budget amendment needs to be effective before the expenditure amounts are exceeded. So you amend before you spend. And budget amendments require the same notice and hearing procedures as required for the adoption of the original budget. So not less than 10, no more than 20-day notice, hold a public hearing, et cetera, et cetera. Now, those budget amendments are also subject to protest. An amendment of a budget after May 31st, which is properly protested but without adequate time for hearing and decision on that protest by the State Appeal Board, before the end of the fiscal year, is then void. So we do recommend, if you need to amend in June, you go ahead and amend. You just got to kind of keep in mind that if you would be protested, there is a risk that there wouldn't be time for a hearing to be held on that protest, and then that would void your amendment. So just kind of keep that in your mind. The amendment form is found by logging into the same online system that you use to adopt your budget. It's all done within the same system. You go back to that current year budget and you select amend. A webinar on the amendment process is viewable on your assessor resource page that we talked about. And you can also access some instructions within the online amendment form itself. So when you're in the form, there is some instructions available. So let's take a few moments to go over the budget timelines. Your county auditor is going to certify valuations by January 1. You're going to develop your proposed budgets by January 1, the assessor, examining board, and board of review. Combine those budgets and file triplicates with the conference board chair. Publish notice of the public hearing and proposed budget summary, again, not less than 10, no more than 20 days prior to the date of the hearing. You hold your hearing, close that hearing, and adopt your budget, and you certify your budget with the county auditor by March 15th. So we'll take a few moments just to have a review of what the online budget system looks like. Again, if you completed the budget last year, then it's going to look very similar. There are no major changes to the forms at this point. So again, like I said, the forms look similar. The login access should go ahead and transfer your Enterprise A&A account and your access to your budget. If you had it last year, you should have it for fiscal 23. But please let me know if that's not the case, or if someone else in your office needs access, or someone needs to be removed, anything like that, just send me an email. So when you're working in the budget system, if you use the tab key during data entry, it does move between the cells in which you can enter data. You can also use the arrow keys side to side and up and down. As you move within a page, the cell that you're in will be highlighted. So this is going to be highlighted here. If you can see, the square around it is highlighted. And the row and column show a green highlight. And the reason why this is provided is just to sort of help you, know where you are within the page. Ending fund balances are produced by subtracting the sum of all expenditures from the sum of beginning balances plus revenue. So that's just sort of a reminder of how those numbers are derived. When you are ready to work in the budget system, again, you go to that same resource page for assessors and you select the blue button entitled Submit and Amend Budget. This will bring you to the Enterprise A&A account log screen. And again, if you had access, you should still have access, but if you don't, send me an email and I will give you some instructions. And then you select Sign In. To begin your budget, you're going to be logged in. You're going to see this sort of home screen on the left-hand side. On the main part of the screen, you're going to see the budgets that are in the system for you. So we did this budget process in the online system in 21. Of course, your 22 current budget. And again, like we talked about, if you need to amend that 22 budget, you'd go here and select Amend. And then, of course, when you're ready to go ahead and work in your 23 budget, you'd select Edit to enter that budget. Once you're inside the budget, you're going to see tabs across the top that represent the different funds and different pages that you complete. Obviously, though, if you're someone that doesn't use the unemployment levy or the tort liability levy, et cetera, those pages are just going to be blank for you and you would just ignore them. The information that you enter on those supplementary pages, you enter all that revenue and expense detail on those supplementary detail sheets. And then the data on those sheets is going to pull forward for you to the adopted budget summary and your hearing tabs. So it'll populate on those other summary sheets for you upon saving. Within each fund, you'll find revenue and expenditure tabs. So when you go to your assessment expense fund tab, you're going to see two tabs within there. You'll see a revenue tab and expenditure tab. So you complete revenue tab, save, expenditure tab, and save. Your valuations will be populated for you. There is no spot on the form to enter any estimated valuations. Once your county auditor has filed the valuations for 2021, they're going to populate it into the adopted budget summary page. Until valuations are filed, or if your county auditor has to unfile value in order to make a correction, you would see the following notice on the top of your budget form. So you'd see this. Okay, and that's just to make sure that you understand that your data may change. Valuations are not filed right now. There's a chance that maybe it's not going to change, but just be aware. You can't really finalize your budget because your values aren't final. And if you have any questions, please contact your county auditor and they'll let you know that they're working in the system or what have you. You can still work on your expenditures and other revenue sources, but just keep in mind that your tax rates may not be final and your tax askings. So if we take a look at the adopted budget summary, like I mentioned, your entry on other pages is going to drive the information up here, right? It's going to pull ending fund balances, expenditures, et cetera, from your supplementary pages from the data that you've entered. Your filing of data by your county auditor is going to populate for you the value here. And again, any cell that's white is a cell you can't enter into. So it's either being pulled from somewhere or it's a calculated field. So on the adopted summary page, the only thing that you're doing is entering your tax asking for your different funds, these blue cells you type into. So you'd go in, you'd enter what you are seeking for tax asking for those different funds. The form is going to look at your asking and do a calculation of the tax rate for you, and then also the tax dollars levied and the estimated utility replacement tax. So just kind of keep in mind that the form's going to do a lot of the work for you, but you will need to enter your tax asking for your different funds. Again, tax asking, this is where you're going to input those figures, and that's really the only place that you're entering data into. So if we hop over to the assessment expense fund, you'll see the expenditure line, and this is where you would plug in, again, in those blue cells, the different expenditures for the assessor's office. And here's the line items for those salaries that you need to list out. So expenditures, and then of course the revenue tab there. So we'll go through a quick FICA transfer example. So if you're levying at your maximum levy of 67.5 cents and you need more revenue to cover the office's contribution to FICA for employees, you can levy tax dollars to cover those expenses. So in our example back here, we requested FICA dollars, right? We said, yep, we need to levy. We're at our maximum of 67.5 cents. We need to levy in addition to that for FICA, also with IPERS in this case. But so we requested $500,000 in tax to cover those expenses. So you'll see that we levied that $500,000. And that revenue is going to come in, and we put it, actually in this case we said in the last couple years, because again your budget is going to list 3 years of data, so we've said in the last few years we've levied this $500,000 for FICA. So we levy that, we see the revenue come in on the FICA tab, right? And then the expenditure we know is going to be actually made out of the assessment expense fund, because that's where the salaries are. So we hop over to the page for our assessment expense fund, that fund page, revenue. And we see it here as coming in. Here's the revenue that we see as property taxes levied. So over here, we see that we're transferring out of the assessment expense fund $500,000, and that comes in as revenue to the assessment expense fund. Revenue to the assessment expense fund as a transfer, and a transfer out from the FICA fund to be spended in the assessment expense fund. Another question I get quite a bit of discussion and that sort of thing happening is regarding designated fund balances. As an assessor, sometimes folks would like to designate fund balances for a future project. So they're saving for a few years for a future reappraisal, something of that nature. So keep in mind that fund balances are simply taking into account for the year all of your expenditures and then subtracting it from your beginning balance and all sources of revenue. That's how you arrive for that year of your ending fund balance. Your ending fund balance is essentially for that year. At the end of that year, what do we think is going to be left as unspent? So when we're saving for a project, we say, okay, at the end of the year, we think we're going to have, in this case, $18,450,000, right? So that's what we think we're going to have in our, essentially, all of our available funds at the end of the year. When we designate fund balance, we're saying, okay, this is what we're going to have at the end of the year, but we don't feel like that's all available just for any expense. We want to say that some of it is actually being saved for a future project. We want to designate or set aside some of that money to be spent in a future year. And typically people will say, okay, well, I want to save a certain amount of money for each year to be spent 3 years from now, something like that. So in this case, what they said was, okay, we want to save $50,000 for 2 years and then spend that in the third year. So our first year example, we ended the year with $18,450,000 that was left. But we're saying of that amount, 50,000 of that is actually not just available for anything. 50,000 of that is set aside for a future project that we're going to do. So it's not all available just for anything, essentially. So we saved 50,000 in that first year. In the next year, we're saying, okay, well, we're going to end the year with 35,400,000. They're really growing their fund balance. But anyway, probably not a realistic example, but this is just using numbers. It's not from anyone's actual budget. So anyway, so in this case, they think in the second year, okay, our fund balance is going to be 35,400,000. But we're growing our savings for this future project. So we're saving another 50,000 to go towards our project to be spent out in a future year. So of that 35,400,000, $100,000 of that, so 50,000 in the first year, 50,000 in the second year. So at the end of this year, $100,000 of that is actually going to be available only for the project. So we're sort of setting aside that amount in savings. So as you're saving, it's not an expenditure, keep in mind. It's just sort of a designation of your existing fund balance. So as you save, it's not an expenditure. But then in the third year, we said, okay, we're going to use $100,000 for a reappraisal project. I know these numbers aren't quite accurate, but this is what we're using for simplicity. So $100,000 that we saved is going to be spent in the third year up here for the actual project. So as you save, you see your designation line grow. It's just, again, simply part of your fund balance. And then in the year that the project actually happens, it's got to be an expenditure item. And then, of course, it's no longer being reserved on this designated line unless you're saving again for another project. So that's it's a typical question I get, folks, and certainly call me if you have questions regarding this process. So in the budget itself, you can also always check errors, you can save, you can print at any time. So printing and saving, you can print the full budget. Oops. You can print your full budget at any time. You can also print, once you've proposed your budget, you can also print only the publication notice should you so choose. If you're in Google Chrome, which we highly recommend as the browser, you can select your local printer, or you can you can print to PDF, save to PDF as your destination. So thereby you can print a hard copy, or you can choose to save off a PDF version, print it later, have it for your records, etc. If you want to include electronic virtual information on your notice, there is a text box at the bottom of the public hearing tab to add the information. Now, within the budget form itself, when you propose, the meeting location is actually a pretty big cell, so some folks just put it there. But if you want to highlight some virtual information for your meeting, then there is a text box to do that separately if you would choose. Always, of course, check your errors. You cannot publish your budget. It won't let you move forward if you have errors. So check your errors, and if you have issues, it'll show up in red. If you have no errors, it'll show up in green and you can proceed. And then you can propose publish your regular budget notice. So you'd select propose publish and you get the screen to enter the date, time, and place for the hearing, as well as contact information and phone number. And as I mentioned, the meeting location spot is relatively large. You can probably fit electronic information in there if you have some you want to include. But if you want to highlight it in a different spot, or I mean, obviously you don't have to include electronic information, but if you would so choose to, that is an option for you. The system then generates a notice that you can print and or save to your system and provide to your newspaper. You can access it at any time though, so if you propose your budget but you're not really ready to ship that off to the newspaper, you can come in the next day and do a print publication notice here. Following the public hearing, your board can make allowable revisions to the budget. Allowable revisions include decreasing the tax asking or decreasing expenditures. You can never ask for more taxes or greater expenditures than what you published in your notice, but you can ask for less. So they can make any allowable revisions. If they do so, you'd come back to the budget and select Return to Draft. Here, there's a Return to Draft button, and essentially it just opens the budget back up for edits. So you go in, make your reductions, and save. And then you would need to propose publish again. Although if you're just making reductions, obviously you're not publishing in the newspaper again. And so then you leave the original publication date the same. If for some reason you had to correct an error or some reason you had to republish, then of course you'd return to draft, make the corrections, propose publish again, and update, change your publication notice. Once you're ready to go, then you would select adopt. You just select that adopt button, and then you would enter your adoption date and click adopt. So you'd do that, you'd go in, you'd do adopt, and at that point you're pretty much ready to go. So you've adopted the budget in the system. The next step then is to file the following documents with the county auditor. You'd provide them with the proof of publication for your budget notice so they can verify that you published as required by law. And you would provide them with a signed adopted budget and supplementary pages. So those are the two things you'd need to provide to your county auditor. Again, if you have any questions, please feel free to contact me. I am available by phone and by email. Thank you.